Hi friends, my name is Mayra Galvez. I am a home advocate and part of the California Real Estate Consultants Group. And today I'm going to be answering a question that I've been getting asked very frequently. And this is, when are prices going to drop? When is my family and myself going to be able to buy that home that we want and get qualified for the loan that we need? So before I dive into that question, I'm going to skim through the process of purchasing a home or getting finance for a home, specifically the underwriting stages. Now, during the underwriting stages, the underwriter analyzes your debt to income ratio, meaning they analyze how much debt you have or how much of your debt is reported in the credit and your income that you are generating. Based on this, they determine whether they should or should not qualify you for the loan based on this, again, debt to income ratio. Now, I do want to give you an example of interest rates and how they are impacting this underwriting stages. Take, for example, a home loan for $600,000 at 3% interest rate. Your monthly payment, including taxes and insurance, would be about $3,000. Now, with that same $600,000 home loan, but at 7% interest rate, which is the rate that we have right now, it is $4,200 a month. So as you can tell, this is over $1,000 difference, meaning that during this underwriting stages, they're saying, okay, maybe you were able to qualify for a loan at 3% and pay $3,000. But now at 7%, your monthly mortgage payment is $4,200. And this, I don't think you can afford, or yes, maybe we can afford or accommodate you for this loan. So this is what I mean when I say that loans are getting canceled, because during this underwriting stages, the underwriter does not approve you for the loan. Now, it's becoming more and more frequent. Many homes are actually experiencing this cancellation or pending of home sales. It's taking longer for them to sell the home, and less people are getting qualified because of the extremely high prices. However, we are starting to see that prices are slightly starting to decrease, or in other words, being sold at the value of the market, of the housing market, because as you know, previously homes are being sold at above the value of the home. Now, I do also want to mention that every neighborhood is very, very different. We live in Los Angeles County where it's very diverse, as you know, and it can be that even within the same neighborhood, zip codes are extremely different. It can be that a freeway is dividing even that same zip code, and part of the on one side of the freeway, the homes are higher in value than the other side of the freeway. Now, I do want to share with you this data analysis that I have. It is for the month of July. So I get one of these every month, and the next one's going to be at the end of August. And this is Los Angeles County as a whole. Now, keep in mind, again, Los Angeles is very diverse. As you can tell, there has been a decrease in the amount of home sales. This orange line is the single family residence. We can see that there has been a decline in home sales. Not only is there a decline in the amount of home sales, but the price is also dipping. We see that during these 3 months, the homes were being sold at a higher price than they are now on average. Now, if you do want a copy of this report, I am more than happy to send it to you. Just go ahead and put your email down there or send me a message with your email and I can give you this free copy. Now, take, for example, an area like Van Nuys. So as you can tell, Van Nuys has different zip codes, and in one zip code, 12 homes were sold in the month of July. In another one, 16 homes were sold in the month of July. And if you click on it, you can see that this orange line represents the value of the home, and this brown line represents the sale price of that home. As you can see, the homes were being sold for a higher price than the actual value of the home for a long period of time, and now they're kind of matching. So the reason I wanted to point this out is because what happens if at this rate that we're experiencing now, homes are not being sold, which is what we're seeing, that homes are not being sold at that specific rate and at that specific home price. So what ends up happening, and has happened in the past, is that home prices then start to dip. However, as I mentioned, every neighborhood is very different. And it can be that one neighborhood may be experiencing a 15% decrease in the price sales of the home, and in another neighborhood, it can be even 50 or even 60% decrease in price of the home. So again, it's so diverse and there's so many factors that take into effect or cause the changes of these kind of trends. It can also be the neighborhood's specific job industry. It can be that one neighborhood may be impacted by future job losses and another neighborhood maybe not impacted as greatly as that other neighborhood. So if you want a kind of like a breakdown of the neighborhood that you're interested in, I'm more than happy to go over this data with you and explain it to you in a way you can understand it. And if you want, or you have any general questions, feel free to reach out to me. I'm more than happy to answer them. Talk to you soon.